US elections are obviously the big news that we're all waiting for in a few weeks, having a big impact on markets at the moment. The Abrdn view was about a 60% chance of a Trump victory, say about 2 or 3 months ago. Since then, Harris has come in and I think defied expectations, really kind of turned that dynamic on its head. If you remember, it was Biden who was like the sort of old white guy in the race. Now that's very much Trump. I think Harris has done pretty well in kind of changing that narrative. We now see it as a 50-50 fight.
That's interesting. May I drop in just there, because it seemed like it was neck and neck, and it is still neck and neck. There is no doubt about it, and it's going to be very, very difficult to get a result on the night. But a lot of the market action of the last, let's just be lazy and say the last week, has looked towards a Trump victory. Is the market, are those hedge funds that are being talked about who are pricing in a Trump victory, are they being premature in terms of what you're seeing and what you're hearing?
I can understand why they are. I think if you look at the betting odds now, Trump is coming back ever so slightly, but I think they are being slightly premature. You've still got a few big data releases coming out. NFPs next week, for example, could have a big sway on that. Again, being in the US and just knowing US culture, Americans are so much dialed into the economy, stock markets, so data releases like this could have a much bigger impact on Americans than they would, say, for the English voter.
So it's still neck and neck. The only thing we should be certain about, some argue, should be the advent of more volatility. We may not know the actual result on the actual day. It may take a couple days here. So how do we hedge that sort of volatility? Do we just go into gold? Do we go into treasuries? Do we go into Swissy? What do we do?
I mean, there are a few ways you can play it, and gold is one, I guess, that acts as a safe haven, so I can understand why investors would go into that. The dollar as well, you'd imagine, would strengthen. We obviously invest a different way for our clients. We invest in the long term, so this would just be a blip for us, really. It's interesting, I think, if you look at who you could see feasibly winning, there are various ways you could play it. You mentioned gold, treasuries as well could be one. Domestic US stocks as well. We buy a Russell tracker that tracks 3,500 stocks. We don't buy a S&P tracker, so that's much less broad, or much more broader. And then you see if you get a Trump victory, for example, that could save our portfolio somewhat, because you've got small caps, mid caps, more domestically orientated stocks in the US, which you think would do well under a Trump presidency.